Hey, it's June in Austin, and we have our first week's worth of data to talk about in terms of pendings and sales in the marketplace. And this week we had a couple of interesting developments. First off, our inventory grew a little bit, but not much because our new listings versus our new pendings were very, very close this week. And so let's just jump right in and talk about that. So here is our inventory chart. We are now just above 11,600, 658 to be exact. Of course, this changes on a daily basis. We record our numbers on Monday morning, so this is the latest and greatest data. I'm recording this on Monday afternoon, June the 3rd. And so inventory remains on an upward trajectory, although it's slowing down. And let's talk about that real quick. So new active listings versus new pending listings. Okay, so here's our chart. We'll go way over here. Last week we put on just one home under 1,000. So 999 new listings and with 823 going pending. There was a little bit of a dip in pendings last week. And of course, a pretty big dip in the number of listings over the last couple of weeks. So if we look at this carefully, like right here is week 3 of May, school's about to let out, and then school lets out the next week. But so we dropped on our pendings that week. First week of vacation, May week 4 and 5 are probably the first 2 weeks. Now we're calling this week 1 of June. We're not obviously through the whole week yet, but that's just how it rounds out as far as looking at weeks of inventory. So we've had a couple of weeks in a row where we've gone down. In fact, now we're solidly under 900 pendings for this last week. I can tell you that I know there's a lot of folks out of town, so that's maybe an excuse for the market, but really there's no more excuses for the market other than we have Father's Day weekend, which is not nearly the same as Mother's Day in terms of activity or lack of activity, maybe. And then, of course, July 4th weekend will be coming up as well. So really, if we're selling your home, we need to get it sold in the next 4 to 6 weeks, because otherwise we'll be on the other side of the tipping point where homes start selling a lot less, because now people are taking vacations in August and trying to wrap things up before school starts. And I think a lot of that activity will happen before the 15th of June. So the next 6 weeks, if you're a seller, we got to be really on our toes to make sure we're priced right, we're showing well, we're getting feedback, and that you as a seller are looking at that feedback and interpreting it for what it is. Complete lack of showings means that we're at least 5% overpriced, maybe even 10%, depending on the home, the area, and the price range. And then if we're getting showings but no hits, and we're getting benign feedback or feedback that we're in the running but they didn't make an offer, we're probably still maybe 5% off on price. And of course, if we're getting lots of showings and we're getting some offers, even if they're not quite right, not quite where we want to take them, then maybe we're 2% or 3% off the mark. But we have seen homes where we had gotten 2 or 3 offers on, and we still haven't sold them just because they were maybe 15 or 20,000 under the price of what we were asking, and now some of those sellers are wishing they would have taken those offers. So let's just be real tight on watching what's going on out there. If you're a seller right now, if you're a buyer, rates are up a little bit over the week. This thing comes out this chart comes out every Thursday. So this is last Thursday's chart. And, if we move my face out of the way, you can see after several weeks of declines, a decline in interest rate, mortgage rates have changed course. They're more hawkish commentary about inflation and so forth. And that's all stuff for the big guys in New York and the banking community in Charlotte and all these other San Francisco and the other banking centers who really are creating the scenario for higher interest rates. But rates still are pretty darn good because we're right at 7. We were under 6 for a week, but now we're back to 7.02, which is where it was at. Right here, that was 2 weeks ago, was 7.02. So we're this little blip I don't necessarily think is a trend, but we certainly were trending downward there for a while, and that 0.5 or 0.25% rather lower still help buyers out. Once again, we're still in a time frame where if you're a buyer, think about dating your interest rate, but marrying the home you're looking at, because rates are going to go down at some point. It's kind of a little bit of a turbulent year for rates because of the inflationary cautions, and of course it's an election year too. So who the heck knows what's going to happen there? But it's a good time to buy a home without a doubt. So let's see what happens. I think last week we had mentioned that we expected maybe more homes to go expire, rather, to not be listed anymore, to delist. And the week before we had 167. Last week we had 282 homes out of the over 11,000 where they called it quits and they just pulled their home off the market completely. That's really, if you look at the year before, those charts are, they're really lined up very similar. So the same thing happened this year that happened last year. Not quite 300 listings came off the market. We do see, like in July and August, that we have a lot more listings come off the market. Those are people that failed to sell their home over the summer. We hope that's not going to be you if you're a seller. But anyway, let's collaborate. If you're getting anxious on selling your home, let's collaborate with your listing agent to find out what's going on and what we can do to improve our efforts to get your home under contract. And do check in with us. We have lots of more statistics that you may want to consider of what's going on in your particular situation if you're a buyer or a seller. Until next week, have a good one, and we'll talk to you then. Thanks.